Hello, everybody. Welcome back to Health and Wealth Simplified, where we discuss talks about healthcare, financial planning, and retirement. I have two experts with me today. This is Steve, our financial advisor, and Helena, our Medicare broker. Welcome to you both. Let's dive right in. Today, we're going to talk about long-term care and what retirees need to think about it. We're going to start with Steve.
So long-term care can be a really expensive expense in retirement. So it's something you need to kind of plan for, whether you think you have the funds or not. Sometimes you can set money aside. Sometimes you can hedge your bets with asset-based plans. You can hedge your bets with putting some money aside using maybe some long-term care insurance. Typically, you want to buy that earlier because it can be very expensive. But there's a lot of things to consider, such as premiums, waiting periods, guarantees, benefits, how the benefits are paid out.
I have a question. What's an asset-based plan?
So an asset-based plan is where you take a lump sum of money and say you drop it into an annuity.
Okay, so annuity is an asset-based plan.
Yeah, and so is life insurance. And they both kind of work the same way. You put in, so you drop in 50 grand or 100 grand. If you have a long-term care need, it will actually pay out double. Some of them will pay out triple depending upon how good your health is when you buy it. But here's the cool part. If you never use it, guess what? You haven't lost the money.
Oh.
You haven't shelled out monthly expensive premiums that you'll never see back in your pocket
but you'll
again.
Be able to do that.
And then either you're going to get the money back, or your heirs, your family will get it back.
Okay, so if you did an annuity, do you have to have a rider or something with a long-term care policy
No, they're specifically set up for that purpose.
for long-term care?
They're called, they're asset-based policies set up for long-term care use. You have to answer questions that, they want to make sure you're not already what they call, missing your 2 out of 6
Already have your activities
right?
in daily living,
right?
not missing that.
So, and the same thing with life insurance. Now, life insurance is a little bit more difficult to qualify for because you're actually buying life insurance. They're going to pay a death benefit, right? But they're easier to qualify for because there's so much of an asset base related to the death benefit.
So this kind of annuity, is it less expensive than actual traditional long-term care?
Well, it's kind of like this. Let's say you got all your retirement assets, right? And you say, okay, I've got 100 grand here that I really don't need for my income or anything. It's kind of for later. It's sitting in a CD at the bank or something. It's just there for an emergency, right?
Right.
So you take your 100 grand that's getting 5%, right?
Yeah.
You take it out, you put that into the annuity. Now, a year or two later, if somebody needs long-term care coverage, that 100 grand now turns into 200 or 300 grand if you qualify the right way. So it can be a really great deal. Or 25 years later, if you've never used it, then it goes to your heirs.
Wow.
So you've not lost any money.
If you don't have access to that fund for yourself or for anything else.
You could take out, so if you have 100 grand in there, right?
Right.
And you say, oh my gosh, my roof, I need a new roof, I need to spend 30 grand on my roof.
Wow.
Or I need to buy a new car, the kids need 10 grand for an emergency. You can pull it out, right? Now there's surrender charges, possibly there's free withdrawals and things like that, but you could access the money. So now let's say you took out 20 grand. Now you have $80,000 of cash. So now you have $160,000 or a $240,000 long-term care benefit instead of a $200,000 or $300,000 benefit.
Still pretty good.
It's a great deal. No, it really is. If you can do it, it's the best way to do it.
All right, let's shift gears real quick. Helena, how does Medicare fit into the long care plan?
Sorry, Medicare includes no long-term care.
Well, that's...
It goes, if you're injured, if you're sick, you can be in a skilled nursing facility up to 100 days or a rehab center. And that's it. After that, you're in long-term care territory. Sorry to tell you that, but like Steve was saying, to get your best rate on a long-term care or a life insurance policy with a kind of a rider, or like you're saying, that annuity thing, do it while you're younger and it's easier to qualify. There's another option though. If you're planning ahead, you can get a kind of a plan that it's not insurance, but it's a bank of hours that you can buy ahead of time. You prepay it every month. And when you do need it, you have access to those hours for caregivers. So that functions as long-term care. And there's really no, unless you have a Medicare Advantage plan that's a group plan that includes it, but those are pretty rare. I have seen one, but no.
Wow. All right, a lot to think about, guys, but our time is just about up. I'd like to thank both of you. We'll talk to you again later.
Awesome.
Bye.